only to that because technology likes to test us.
Stacy, do you need any help with anything?
No,
Okay.
it's so good. Can't really set up and install it later, so you don't really need the instructions.
I'll be here if you need any help for
Thanks.
the majority of the day.
Okay.
There's a newer recruitment actually. I managed to Charlie. I talked to he's asking if he can join the coaching call on Monday. To see what it's like, but we also said at 8 a.m. so we can probably know.
Yeah,
This is yours will start with 10.
correct. Yeah.
Well,
So I know Margaret doesn't usually have a problem with that, so.
okay. Yeah, I just didn't know if that was, something exclusive, but thank you.
Yep.
Oh, you don't have a battery. Cool, I don't know why I already. Or the red shirt I have not there. I'm not hauling. But I eventually go to school there, but I know that their house, I know that they're already stuff to look in. Oh, sorry for leaving. What do you need? There's some boxes up there apparently, which I don't know which ones. Maybe it's all out of the. Oh, box. So. What are you using? Awesome. Looking for a step stool or a ladder of some sort.
Oh.
No. Who's the curator?
Another curator.
Dale, where's the job?
You got insurance for that, right?
I don't believe it. It looks like yes. There's nothing in this. That in the next. Oh. Hello, Margaret.
Hello. What's on my Facebook people? I don't know.
That's awesome. We're racking up now. I suppose it's under my little spot.
Well, we got to put for your check. And I'll do that. I was each and then. So.
Dog festival.
Yeah. You want these that I'm not using that? Sure.
Good. I need to do my brain. I basically I made an inventory sheet for her, so she's stored with your and bars. One of the location application from doing next on them. So four was on the side, one went together.
Yeah, I got.
That's what I did.
Minus this. Good. Right? Down. This is another option. Now. There you go. So it looks like you need trash bag and towel. Oh, I see. I think that is water bottle, case, Dr. Pepper. This is right, you know, over.
Well, that's why it's your okay.
Less than or equal to draw. So now, yeah. Is that it? The police started on the house when you're back. Just because I do the work, so you, if I was supposed to go to format, condition format, you would do that.
Yeah.
Hi Diane, it's Dale.
Yeah.
Well, I'm confused on this one. This one I thought I've seen it all. It looks like we have 2 appraisals for this absent file.
Yeah.
Oh no. Got it. Oh shit.
Yeah, I mean, you really put it out.
Okay. Huh. Interesting. Well, do we just get this back? Yesterday, okay. Alrighty, I will send it to the realtor. Can you, those corrections were itemized on your initial approval, right? I just wanted to point out what the appraisal corrected. Okay, just to let her know this is what happened.
For people or X, and then there's a box of massive silver.
Right, that makes sense.
Well, we have close.
Staples. She told me I was buying, I told her about Staples. That was a lot.
I have them on the PDF of your approved poll somewhere. So I can pick them up. Yeah, all right.
She said.
And we're all saying, right. We, okay, well, thank you for the clarification. I thought I was missing it. Yeah. Okay. Was condition. No. Do you think those base things I bought for the work for? Oh, I should want to try to put in the trash cans instead. Because I saw that trash can, it was a trash house. And then like the ones crazy. Oh, how cool out of my house, stay tuned up for a while. Yeah. So, I'm wondering if that. And then we should pay her.
Oh, you know, you're going to be up there. Yeah, it's always cool there. Wow. Well, we did the border too.
then that order for you. And there are additional and value in when some of the other for her perspective, maybe okay. Yeah, not a little back for maybe that's a problem. Where you have and driver, they were cut this on. Again, which then anxiety. Yeah, I think we want to say their right. Or you can call their the deadline. The deadline is expired. Absolutely. You call it another month. Yeah. I expert. Absolutely. And then something right there. There's one guy wrong. I don't know. I know. Yeah. I'm looking at that. They are 28 cold weight. The average of the house is less than that's so they're considering in the cost, right? Okay. They're full.
How are you?
How about yourself?
Well.
So hard, I've never heard. Oh, gosh. Oh, they just. I just knocked the whole coffee over. We hear my 70. Let me call you back. Bye. Of course, MLS isn't working. And I thought yesterday, but. I'm sorry. Yeah, like, it's not on it, it's.
I think that.
Not big. But we already used to it now. Okay. Wow. Yeah. Maybe we'll just maybe the smell of it. Yeah. I mean, it's not, you know. Hello, guys need help? Oh, good. Have you? Yeah, yeah. I hate when I spill stuff. I can't even do it by myself. So there's people forever. Gosh, I'm trying. The process, you know, my soda. How do you do this? Big though. You're gonna shut down. Have been bad. But it's for people. Just I had people hanging on pushing here, so it's not perfect little bit. That's right. And you watch the story anyway, so that you guys speak to people home. There you go. All right, let's do it better. Thank you. Hope you're welcome. Yeah, so I'm so excited about it. Which is probably. Is that the stuff you read? What were those like? All right, Chris. Okay, tell us that. Oh, yeah. You might think you're good. All right.
All right.
So maybe I should just film and then share my screen. That sounds.
Yeah, so try to share, well, yeah, hit join the
Recording in progress.
Turn your volume off. Otherwise, we'll get that crazy. And then use yourself.
Oh, yeah.
And then.
And then I'm going to just present.
No, I don't think we have access to share yet.
Oh.
Go back to Zoom. Sorry.
It's okay.
Oh,
Right.
Hit the screen share there.
Yep.
And then click on that one there. And perfect. So yeah, once you hit present, then it should present up here too, and you should be good to go and running.
You made it look so easy.
For those of you on Zoom, can you hear us okay?
Yes.
Yes. And we can hear you. We're all connected. Thank you for confirming, Kelly.
You're welcome.
We'll get started in just a couple of minutes.
Will we be able to record and send this out afterwards?
Can you record and send it out? Sure.
I'll be on Zoom, or hopefully on Zoom.
Yeah.
Are you here?
Hello.
I'm here,
Hi.
yeah, I'm here, buddy, wherever. I'll move like that. I feel like I have nothing about this, nothing, okay. So,
well,
hopefully learn a lot then.
because you're smart.
And so have you been busy?
Yes, but I've been busy also with Big Skull and
Your life in general, yeah.
very, very busy.
Dale, thank you for calling yesterday.
Of course.
I wanted to chat, but we got a little bit busy and,
Yes.
so. Yeah, I saw, Sonia looking at the cute little starter home, so then I'm like, hey, what you doing
Hey.
there?
Yeah, she did not reply. But I emailed and called her.
She probably will, and she's probably intimidated, she's like 28 probably. So I think she's a little intimidated by
Yeah.
everything.
Yeah, it's a lot.
I say that, like, this girl has a lot of confidence and she works well with everybody in the office, so.
I know, I got the no classes today, like, yeah.
I know. My head was like racing through. I'm like,
You're so close to your life.
the squirrels in the wires.
Yeah, I was
You know, whatever.
like, I know.
Can nobody register?
Yeah.
Um,
Cause when I put it in my calendar, when I get the reminders, it'll say Zoom and all the information on Zoom, like, is it a Zoom? Or is it in person? And like, and without that little extra email that says
totally.
both, then I'm like, oh, no. So I went back, cause there's a little thing. When you make
Yeah.
it, it's like if you need to cancel or whatever.
Right.
Or look at it, which is so helpful. So the email's away.
It's a lot to
I found it.
track up for Elizabeth, I'm sure. But
Yeah.
I'm glad you guys came in person because it's,
I know.
and thank you Zoom people too.
I don't want to Zoom.
Okay, I think so. I'm gonna close the door and then we'll get started.
Oh, good.
Okay,
I'm gonna get this.
okay. One more minute. That snow's short-lived.
What's that?
That snow is short-lived.
I can't, there's no trace of it, right? They were mowing our lawn today. I'm like,
So great out there.
This is spring snow.
There's no room for anybody to walk.
All right. Okay, I'm gonna get started. Okay, please stop me if you guys can't hear me, or please feel free to interrupt me. I am a fast talker and I will do my best. But today I'm going to talk about down payment assistance programs, minimum down, kind of just run through the main programs and just at the end have a cheat sheet of quick things that you should know to just have enough knowledge to talk to buyers. This can also help with listings as well. And this is our hour-long class, not 5 minutes. So I'm gonna get a little in the weeds. Hopefully it's not TMI, but it's nice to know how these programs work so you can talk a little bit about them with knowledge to potential buyers. All right. Okay, so in general, this is the problem. They want to save money, but we also want to live, and it's just expensive to live in Colorado, right? Most people don't have anything saved that are first-time home buyers, or they have very minimal saved, or maybe they're getting money from family. We're going to talk about that, but here's how we can come in to help them. Today's buyer, the average home in Denver costs around, kind of low 500s. Which the minimum income needed to buy a home in that price range is probably about 160,000. So affordability is the challenge when our median income is 93,000. Now we can't help them make more money, but we can certainly help bridge the gap for down payment to get them into a starter home and leverage into their next home. So in general, here are down payment sources. So a lot of people don't think of retirement account loans. So most 401ks will allow a loan against the 401k up to 50% of the balance, usually capped at $50,000, to use towards the purchase of a primary home. So when your client is talking about that, they do have to be very specific with their retirement holder to ask them if this is a possibility. They are not taking a withdrawal. There should not be any penalties. This is a loan they're taking against their asset, which oftentimes the interest paid on that goes back to themselves. So this is a great way for them to leverage into a home. They can get gifts or other private loans. Of course, savings checking, second loans, which we'll talk about, VA and USDA financing, or down payment assistance. All right, so we'll talk a little bit about VA loans. As you guys probably all know, VA is a zero down loan for veterans. It's a government loan with 100% financing. They do not have mortgage insurance, but there is a funding fee. The funding fee can be waived if they're a veteran that has disability, then they don't pay that fee. And in general, that fee is financed into the loan, so they're not paying out of pocket. VA really is truly a zero down loan. There's, of course, your closing costs, but those can be paid by the seller, so pretty minimal. If a VA buyer is coming in and they have most of their closing costs covered and they're doing zero down, if they paid $5,000 earnest money, they might then walk away with a check for a few $1,000s, depending on what might be left over from closing costs. That's how that works, right? Yeah.
So this is probably a silly question, but I wondered it for like
No silly questions.
months. So a VA loan is specifically for the veteran,
Yeah.
not a spouse or any family that can be tied with veteran banks.
It can be a veteran or a widow of a veteran.
Okay,
Yes.
okay. Thank you,
Mm-hmm.
but not the kids.
Not the kids.
Okay.
No. And the appraisal must be performed by the VA approved appraiser. That's something different about VA. Doesn't have much to do with down payment assistance, but there are really no loan limits. I know that says that. I should have deleted that. This is an old slide. So minimum down payment 0. There is no max loan amount. You really could do a zero down $5 million loan on a $5 million home. There's also no minimum credit score requirement, but there are other, debt to income requirements, residual income requirements that we're looking at. Typically, we do still want to have them have like at least a 580 score, but the VA itself does not require a minimum score. It is only for primary residences. You cannot use a VA loan for a second home or investment property, and the max seller credit is 4%. All right, anyone want to chat more about VA or have questions about that zero down program? Okay. So USDA is a really underutilized program. This is for rural areas. Home buyers buying a home in a designated rural area can do 0% down financing. So this is something that if you think your listing might be in a USDA area, you should check and have a little flyer out so that people know, oh, this could be an option for my listing. They do have income limits, and it is a pretty small box that buyers are required to fit in. So that is why it's underutilized, because it can be tricky to qualify, but it's a great program if they can check all the boxes. It has lower interest rates, lower mortgage insurance premiums, and can't beat zero down. The max loan amount is going to be determined by the county. It's typically that conforming limit. Minimum credit score is 620. They can get a 6% seller concession. So this would be similar. You come in with your earnest money, you're zero down, maybe your closing costs are paid at closing by the seller. You walk away then with a check at closing, getting your earnest money refunded to you, right? I think the key for any of these zero down programs when we're talking to buyers is you still got to come up with earnest money somehow. So how do we do that? Maybe, like we had mentioned before, a loan against your retirement that you quickly pay back, right? Of course, that retirement loan does have a payment. So if they're worried about balancing that and their new housing payment, but we can get them into zero down, that loan could be for the earnest money that they then refund, or maybe they get a gift from family. Gift from family, the gift letter is required. So a family member is saying, this money does not need to be repaid. However, the buyer can repay them. There's no rule that says, hey, you can't give mom back her money. So that's another way to leverage it with that earnest money. Here is the USDA eligibility map. I have a little QR code so you can scan that to check the property eligibility. We're happy to check for you, or you can very easily Google USDA property eligibility and it will come up with this map where you can search an address. There are parts of Erie that are USDA eligible, right? So really, although all the mountains are pretty much USDA eligible, right? It's the orange is not, okay? So it's the outside part. A lot of these areas, we're looking at houses that are too expensive and would require more income that would probably exceed the threshold of USDA. So it is more custom for it east, right? All the way over to Fort Morgan. There's parts of Meade and Johnstown, and then up north as well. So again, check that map when you have a listing that you think might fit. Again, it's more areas than you would think, even into like Weld County, that should be eligible, and you could advertise zero down. Okay, so now I'm going to talk about CHAFA. CHAFA is the #1 down payment assistance program. This is our go-to program. It is, I think, the best one out there for your average buyer that needs down payment assistance. It's the most affordable and has the best terms of mortgage. Their basic requirements are 620 score. They do have income limits. I'll show a screen with those. The borrowers must independently complete a home buyer education class. So that means if there's 4 buyers on that loan, they all got to take that class. And they do it online and in person. Online, they can kind of self-paced, but they do have to pay for it. I want to say it's $175, or they can do the free in person. I think it's a 4-hour class. They have tons of options. And that certification is good for a year. So we always try to urge our buyers, hey, do this now. If you're planning to buy in the next year, get that class done. They do require a minimum contribution of $1,000. So in this case, like we talked about, maybe they come in with their $3,000 earnest money. We get them enough seller credits to cover closing costs. They then walk away with $2,000 because they do have to have at least $1,000 into the transaction. All right. So I spoke about how it's a 620 credit score. Pretty much all down payment assistant options are going to have some kind of credit score threshold. So I'm going to talk just briefly about basics of credit improvement, what we are looking for to help our clients. So we'll often look at revolving debt utilization. It's not an amount, right? People might think, oh, I have $10,000 balance on my credit card. Well, if your max limit is $30,000, you're fine. Your utilization percentage is low. So we can tackle this from both angles of, hey, either pay down debt, or if we have enough time and we're planning far ahead, hey, call your credit card company and ask if they'll raise your limit. That way your utilization percentage is going down. Okay. Experian Boost is a free website they can go on and just follow some steps, put in their name, their social, their address, and do this Experian Boost. And sometimes that can just give them an extra 5 points. And when we're close to that threshold, you can bet we're going to try that. They can report rent and utilities. What's nice about this is it's they're reporting their credit history, but it's not debt that counts against them when it comes to buying a mortgage. There is such thing as a credit builder card. This is designed for people who have, so maybe you had past credit, but you haven't used credit in a long time. So you might not have a score. Credit requires active utilization of credit cards and debt. So we have this credit builder card that reports to the bureaus like 6 times within a month, whereas the other cards are once a month. So I've had that situation where, hey, we went under contract and didn't apply beforehand and now we have no credit score. We can use this credit builder card. So that's kind of a cool thing to know about. Authorized signer is great for our young buyers who don't have credit history. I learned this the hard way recently. You have to have 6 months of credit history to have a credit score for a mortgage check. So that means my buyer who opened their credit card in February still doesn't have a score. And so what we do is have them be added to mom or dad or someone's credit card as an authorized signer, and then they get the history of that card. Right? We use this a lot for, maybe you've heard us talk about kiddie condos, parents buying a home for their kid, but they don't want to buy it as an investment. We want that kid to be on the loan so we can buy it as a primary and do minimum down. When we do that, we say, okay, have your kid added to your credit card as an authorized signer. They never have to touch that card. And they probably shouldn't. Cut it up when you get it in the mail. It's going to give them a credit score with all that good history, so they have a pretty good score out the gate. And all that takes is a phone call to the credit companies. I'm not going to talk about that. And then also removing past delinquent debt. A new law was passed last year, I think, that medical collections are no longer reporting to credit, which is amazing. And some people don't know that. And they call me and think their credit score is going to be terrible because they have medical collections. And I'm like, you know what? You might be better off than you think. But there is, of course, other past delinquent debt that could be reporting, especially for stuff in collections. Oftentimes they can call those companies and say, hey, I want to settle. Let's get this thing removed. And they can pay a much lower balance or get on some kind of payment plan to get that removed from their credit. And then we have what's called a rapid freeze score. So when we do check credit, and the most common reason we use this is their credit utilization is high. So although you might say, I pay my credit cards every month, we don't know when the credit card companies report to the bureaus. They don't keep that public information. So if you paid off your card on the 20th, but they reported on the 19th, and your card was in the max limit, guess what? That's what reported to the bureaus, and that's what's affecting your score. And so we might say, all right, your card is paid off now, or pay your card off to a certain balance, get us an updated balance letter. We then submit that to the credit bureaus, and they turn around a new score in like 3 to 5 days. So sometimes we're doing this while we're under contract, if it helps our clients. All right. So I think that, what does that QR code go to? I think that was the Experian Boost, if you guys wanted to check that out. All right, so here are the CHAPA income limits this year. They change them annually. For most all of their programs, it's going to be $174,000 a household. So they're pretty generous on their income limits. Income at or below 80% of the area median income for conventional CHAPA loans will receive lower mortgage insurance. I'm going to kind of breeze through these. So again, I'm getting a little into the weeds. You guys do not know how to use these programs, but it's nice to understand how they function. A lot of times people think that they're just going to get free money to buy a house. And when I started this business, it was like that. It was more of a grant model. That has kind of gone away. So there's one grant option for CHAPA. You'll see this, it's called CHAPA Smart Step. See, the rate for the grant is about 0.5%. It is 0.5% higher, right? So a lot of time folks are like, that payment is not affordable. I can't do that option. We're leaning more into this option, the third column, which is a second mortgage. How that works is it's a second mortgage that has no interest and no payment until year 31 when it's due paid off in full. Buyers ask me, well, should I pay it off sooner? It's like, no, it's no interest. Wait, it does have to be repaid or resubordinated when they refinance. So that can make that refinance take quite a bit longer. So we're having those conversations with those buyers. Hey, if you're thinking you're going to refinance this soon, you got to think about your equity position because really you're pretty under leveraged, right? So you might be putting 3.5% down, but then they give you a 4% second mortgage. So you're actually borrowing more than the house is worth. Okay. This program, so these are their conventional programs. You can see if they're in the very low income program, very few people in Colorado would fit that and be able to buy a house. They can get a slightly better rate. CHAPA First Step is for first time home buyers. So none of the other ones require that first time home buyer designation. Only CHAPA First Step. For that, anyone care to tell me what the definition of a first time home buyer is? It's not as basic as you would think.
Oh, no, I don't want to answer.
Okay. Anyone like? It is anyone who hasn't owned a home within the past 3 years. So if they had a home and they sold it 5 years ago, they are considered a first time home buyer. A first time home buyer can also be the outspouse in a divorce if the only house they owned was a joint marital home. Okay, so I'm going to say that in a different way because that's a little confusing. So if a couple buys a home together, that's their first home. And then when we talk about divorce, we say the house spouse and the out spouse. Like if, okay, so let's say wife is saying, I'm going to move on and buy myself a new house, then she is then considered a first time home buyer. Okay,
Regardless of time.
regardless of timing. Yep.
It's not Kim Kardashian and it's not 72 days later. I'm like, okay.
Regardless of time, she does not have to have that 3 year history. It's just, hey, was the marital home beforehand the only home you've ever owned? Great, you are then a first time home buyer.
Yeah.
Under the clause of divorce. Okay. A lot of people ask, what do I get as a first time home buyer? Frankly, there's just not a lot. A lot of these programs are more income driven to help people that have median and lower income levels. So if you're a first time home buyer, you come to me, you make 300 grand a year and you have a big down payment, I'm going to say just use a regular loan. You're going to be better off. As you can see, these rates are a little higher than the rates that we quote for standard conventional loans, right? This one's a conventional loan at 6.75%, whereas a regular loan is going to be like 6.375% today. So they really are better off just doing standard financing unless this program is needed. Sometimes we'll also say, hey, I know you saved your 3% down payment, but why don't we use this and pay off that giant car payment that you have? That way you can afford more house. We'll use down payment assistance, use your funds to pay off the car, and voila, now you can afford much more. This CHAPA First Generation, this is a pretty cool program. That's for if they sign an affidavit basically that says no one in their family has ever owned a house, and then they can get that better rate for that part. And then this low one, CHAPA Home Access, that is for buyers who have someone in their family or they themselves have a permanent disability as defined by the Social Security Bureau. So I've done this for 2 families now that have autistic children that have a severe disability. They get Social Security paid by the state, so it's obvious that that disability is recognized by the Social Security Bureau, and they get so the way this model works is they get 4% of their loan amount in the form of that second mortgage. This one gives them 25 grand no matter what. So they get a lot more money on that zero interest. We'll use that for their down payment, paying closing costs, pay HOA dues for a year. Maybe we put more down payment than they would have normally. So that is a really cool program that is not well known. And be careful because at least it was before that lenders had to have special approval to use that program. They had to take a special class. There are a lot of unique requirements. So call me. And if you're not talking with me, make sure that they really have taken the training for that program. All right. Okay, so if I have down payment, why would I still consider CHAPA? Okay, so I kind of talked about this. We might still say, hey, use your cash to pay something else off, and we'll use CHAPA down payment. And so that they have no interest on that second mortgage debt. We would not use CHAPA if they need a non-occupying cosigner. Doesn't work. That oftentimes also pushes them past the income limit. And it's worse terms and payment. I also talked about that. Chapman does, they just changed their rules. They do permit a permanent interest rate buy down. It's pretty expensive. So it's, unless we have a very generous seller credit, we're probably not spending 0.625% of their rate or just a 0.125% difference.
So can I ask a quick
Yeah.
question? Does that mean they can't refinance if the rates drop a couple of percent?
They can refinance.
Okay.
At that point, though, they either need to consolidate that second mortgage that has no interest, so that they then have a larger loan that they're paying interest on, and they have to have some equity. So they're not going to refinance you at 100% loan to value. So it's going to take them a longer time to refinance. Unless they refinance with Chafa. Chafa does do a refinance. Their rate's a little higher, and they'll resubordinate that second mortgage.
Is there an average time when people should wait before refinancing, that it's like typically by this time you've built some equity in your home that you've seen? Okay,
There's no typical answer.
yeah.
What we
Neighborhoods and-
Yeah, we
Yeah.
would say, have you done any improvements to your house?
Yeah.
Right, so that would help you move along. Have you paid any extra towards principal? That would help you along by increasing your equity position. Because really what it's based on is a new appraisal and your current loan balance.
Yeah.
And then they have to wait at least 6 months. For this type of buyer, especially in this market, it's probably taking them a while unless they are paying extra towards principal and doing some improvements on their home to get that equity increase in a short period of time. That's a good question. Temporary buy downs are not permitted in that program. Okay, so this is another, so I'm not getting too much in the weeds for you guys, but this is a cool program to know about because it has no income limit. The credit score goes a little bit lower. I haven't used this program a lot because I've kind of wrote it off thinking that the rates were too high. The rates are about 0.3% higher, but being that they allow no a non-occupant co-borrower and they don't have an income limit, this really could be a game changer. It's a cool program, and they have a model where they will do either a repayable second mortgage or one that's forgivable after 3 years. So that is more like that grant model. They got to stay in the home, they got to make timely payments for 3 years. But assuming they do that, they haven't refinanced, then that assistance just disappears. That is FHA and USDA only, so these are government, it's a government product. There are other options that are similar to this that can be used, just like that one, as I mentioned, that forgivable second mortgage, that can be used with our Home Fund It program. So I'm going to talk a little bit about Home Fund It. Sorry if you guys have already attended classes on this, but it is such a cool program. I love to talk about it, and it can really leverage your business if you're not using this or putting it out there to folks on social media and talking about it. This graph shows the NEPO housing market. So basically what it's showing is more than 20% of oh, sorry, my graph is not blocked off for me. Okay. Millennials are having more than 20% of millennials are having their parents help with down payment assistance or some kind of family member. So here's where we talk about Home Fund It. This is basically crowdfunding for down payment. CMG has a proprietary product. We have a waiver from Freddie Mac to say anybody can give towards down payment. When we were talking about gift earlier, that has to be from family. They have to sign that letter that says it doesn't have to be repaid. We have to source the funds. It's fine, but it's some added steps there. We have a waiver from Freddie Mac that says, hey, we're going to let anybody give towards down payment. They can even put it on their credit card. So here's kind of a graph to show you, hey, usually only parents are asked, but what if we were to ask other people and kind of put it out there? I think, especially older people have a heart for young buyers who are having such a hard time getting into the housing market. And so this is a great gateway. It has no offline paperwork. They can give on their credit card. The max is $5,000 per donor. There's no maximum campaign limit. So if you want to raise 100 grand and you can, great, go at it, or more. There's no commissions, there's no cost to doing this, there's no time limit, and this works with any loan program except the state funded down payment assistance options like CHAPA, right? We can't use that hand in hand. Here's kind of a visual of what those campaigns look like. If you ever have seen a GoFundMe, it's very similar. They put their little story together about them, put up a photo, make their goal of how much money they want to raise. Excuse me. And then there's a comment section that people can write on. They can also share this on social media. That's the main piece. This can be branded to you. They can share it on social media. Every time they share it, they get $5 into their account. And it also gives you exposure if you're linked to them for their friends to say, oh, how are you doing that? I want to do that too. Oh yeah, well, I'm signed up through Anna. Sign up with her too. Great. We give $2 for every $1 raised up to $2,000 grant. So a simpler way of saying that might be, hey, you raise $1,000, we give you 2,000. If they raise 500, they get 1,000. There's no limitation on this. There's no income limits. There's no down payment limits. It's just, hey, you're a first-time home buyer. We want to help you save money. All right. They have to be a first-time home buyer, and they also have to complete this little online class before they go under contract, or they are not eligible for the $2,000 grant. If they're not a first-time home buyer, they can still use this program. It's really popular for an alternative wedding registry. So, you know, it can still be used in that way. So here's a more close-up of that campaign page. As you'll see, I'm going to have a link later on where you can sign up to have your own kind of portal of people sign up. So it would show on their page with people clicking to make their donations, the lender's information, but also your information here. So that would have your photo, your name, and contact information. You'll see here it also has this thing called Up It. So all of these stores have pledged to help first-time homebuyers as well. So over 1,000 retailers have said, hey, you'll get a rebate of, on average, 7.6% cash back to your home fund account by shopping at these sites. So anyone that goes on their campaign, or if they themselves are shopping at these sites while that campaign is open, they're going to get some cash back into that fund. And our 2-to-1 match goes on top of that. So they could literally just be someone who's like, I don't know, maybe I'll buy a house in 2 years. Sign up for this. It adds a little, I think it's called a widget to their browser. Maybe some of you have that with Capital One. Like I have that thing where it says like save. So it's very similar. It would pop up and they could save money into their account. And as you can see, these are big distributors like Walmart, Home Depot, Walgreens are on there. So not, you know, all places that we all shop and can get that cash back into their home fund. All right. I'm sorry, they get $10. I thought it was $5 for every share on social media, and that also goes towards their $2,000. So if they get per person per platform, that is $10 plus we do our 2-to-1 match. So every time they share, when they're within that limit, they get more money, free money added into their account. All right. And if their mom shares it, they also get that $10 into their account. So here's a QR code. If you guys are able to scan that online, I'm not sure, but if not, feel free to message me. I can send you the link where you can sign up for your own home funded page.
And there's not a time frame how long this can.
Nope, there's no time frame, and it's their money. So I've had people say, you know what, I'm gonna put this on pause. I think I'm gonna move to Canada. Okay, well, I can't help you if you're buying in Canada. So they can withdraw that money at any time. It's their money. we are not, we don't own that money. Of course, we own the grant money. That money is going towards their purchase. They're not going to get any of those extra funds unless they buy a house with CMG. But any of the money donated from friends, neighbors, family, they can withdraw at any time. Any more questions about that program? Maybe someone online had something. No. Okay. We do a class on this every Friday at 11 o'clock where they do a webinar and they dive deep into, I think, 6 main ways that you can build your business based on this program. So, of course, I think weddings and graduations. I've also had this where we leverage it into businesses as a benefit for their employees. You have the 401k, you have the health benefits, the gym memberships, whatever you have there. Do you have a home ownership benefit? How can we angle that to get in front of more people to present this, and maybe the employer contributes towards their employees to help them buy homes? So many other ways too. That class is great at 11 that one of our associates teaches. And in general, if you have more questions or want to talk about how to leverage this, contact me.
Are they gonna be on Zoom? The other ones?
The one at 11 is
Yeah.
a webinar every Friday at 11.
Okay.
Yep.
This is just one that's in person, but is this different? Than
This
that?
is,
Okay.
yes, so this is 1 hour just on the home funded.
Got it,
So
okay.
he'll just go dive deep into like all many ways you can use it and really leverage your business. For all of this stuff, we have flyers, or the programs have flyers online. Like if you went to Chaffa marketing, you can create your own flyer, Chaffa flyer. You just upload your stuff. We're happy to do that for you too, at no cost. I think, once you sign up to be a realtor, you realize all these things have these added costs to them with marketing. Whatever you do through us, I'd say 99% of it is free. We just want to be a resource, and obviously we want to help your buyers and get more business too. So we have a marketing person. His name's Greg, and he does all of our marketing. He does property websites. He will put together a custom flyer for you, or see what we have in our library. You're not burdening me. That's why we pay this guy to help us. So please use him, and for anything, not just down payment assistance, but in general. All right, so here's your little cheat sheet on down payment assistance. This is really what I hope you're taking away to kind of internalize for buyers. Typically, they need at least $1,000 minimum investment. I should have put a little asterisk to say need earnest money, right? That is like the thing I want to really drive home, because so many people think they can just write a contract for a house because they approve for 0 down. Well, yes, you might be approved for 0 down, but you still need that money. There are credit score requirements. Most programs have those income limitations. For any of your listings, check your address or have your lender check the address. We can check for possible programs. So I highlighted the main ones here. There are so many. And a lot of them are area specific. So if they're in certain sects, the government deems as, I don't know, having different, parameters, I guess.
Not like unincorporated places.
Not really unincorporated places, but places that are classically for like lower income areas, or in the past have been had some weird things happen to them with housing.
Yeah.
Like the government. So all that to say, just check the address. Sometimes it's okay, you're eligible for this lower interest rate program, or you're eligible for this grant. I didn't talk a lot about grants here because they're very specific. There are some that exist, but most of them are for a much lower income and they're area targeted. So it's not like, hey, anybody can get this. It's really, okay, send me the address you want for the house that you want, and I'll see if it applies.
And Dale, is that only residential, or does it apply for like commercial or
Residential.
Okay.
Yep. And it's not like, oh, I got $10,000 in a grant. It's like,
Yeah.
1,500, which is great. but you're not getting your down payment in a grant.
Okay.
For the most part. These may need longer approval timeframes. So of this list of, I think there were 9 CHAFA programs, about 4 of them need to be sent to CHAFA directly for approval. That's an added week. We probably want to build into that, typical 30-day contract. We probably want to do 35 days, just giving us extra time for CHAFA to review that program. Same thing with the Chinoa program, or really a lot of them under the sun, they require a second level review. So you want to make sure with the lender, hopefully they're communicating that as well. If they're doing one of these unique programs, we want to give ourselves extra time and protect our buyers' earnest money. I think right now we're not in a super competitive buyer's market, so sellers are more open to these conversations. The pre-approval letter is just going to say a 3% down conventional loan or a 3.5% down FHA loan. We don't have to disclose that they're using down payment assistance, but they're probably going to want to know why if you're asking for more time. And they're very well qualified buyers. Just because you're using down payment assistance doesn't mean it's a bad buyer. So on the listing side, when you get that offer, you can tell your seller, hey, I spoke with the lender, they're still very well qualified. Just because they're using down payment assistance and needs a little more time doesn't mean we shouldn't give this offers any credit, right?
Dylan, I think someone asked something on the chat.
Oh. Someone asked something on the chat?
Yeah.
Well, okay. I don't know.
I think she wanted your number.
Does she want my number? I'll give you my number. Oh, there's the chat. I don't see it on my screen. So I will do that after I'm done with this. I will put it in there. Some professions are eligible for additional grants, like first responders, nurses, doctors. They might get $500 off their closing costs. Not huge stuff out there. People always ask me, I'm a teacher, what can I get? And I used to be a teacher. I would think I would know, but I don't know of like a great option for teachers to help them with down payment. There are city specific stuff, like Breckenridge has stuff to help lower income, like that specific area, things like that. But in general, it's not a huge help typically for those. And then also another take home is down payment assistance is often a second mortgage. It's not free money. So there's not a lot of free money floating around out there. Unless you find some, please, you have to share with me. And then one thing I didn't mention too is I said there's not a lot of benefits for first time home buyers. One benefit that is relevant, they don't have an income limit on this, but any first time home buyer of any income, as long as they're buying in conforming loan limits, can do 3% down. So that's great for a lot of folks. Okay. Oh, there's my number. Any other questions or comments? If anybody want to add to?
I kind of have a question, and I don't know if I'm wording it right, but for that USDA,
Yeah.
is it because the property will be used for some type of agricultural use in order for someone to qualify for it, or can it be just like someone buys in that area?
That's a great question. No, it's just area specific.
Okay.
It doesn't have to be zoned for agriculture.
Okay.
Yeah. So USDA is just, let's just get more people to buy houses in this.
Yeah.
In the plains.
And they may get land with it too, but it doesn't have to be.
It could be a condo.
Okay, for that. Okay.
Totally. Yeah.
Well, thank you.
Mm-hmm. Any other questions?
I think he's asking.
Oh, here's my chat. Okay. It scans on Zoom, thank you. There's my phone number. I'll look for the Friday home fund meeting. Okay. Yeah, Lee, I can send you an email that maybe if you want that home funded webinar email, just shoot me an email. There's my email right there on the screen, and then I will send that out to you guys. Okay, well that wraps us up. Thank you guys for attending. I hope this helps you at least have more conversation starters with buyers and take us up on marketing stuff. Greg's awesome and is super quick to help you create materials. Okay.
I love this. This was helpful.
Awesome.
Yeah.
Thank you. Thanks for coming in person. Sometimes it's just one too, and I'm just talking to one person.
I know. Well, that's what I thought. I was like, there's still a lot of.
I almost asked you back.
Let's go. Okay, good. It's like, I hope that she doesn't think I'm weird and I'm the only one.
My husband used to teach yoga at this like teeny hole in the wall studio in Boulder,
Mhm.
and I would go, and sometimes it'd be like one other person.
Oh,
I'd
yeah.
just be like, "Thank you for coming." So it wasn't just like me and this lady.
I think we have to hit leave.
Oh, dude, sorry.
I think so.
Over here chatting.
I know this first.
So talking about yoga classes.
Which was good. Also good.
Maybe I can do it back there.
Okay.